Thank you very much. Well, guys, we are going to speak about money and VCs. Really nice to have you. Thanks a lot to Merch for inviting me and also for allowing me to speak with these really interesting guys. Badly that Robbie is not joining, but well, we are going to do our best here. We have Carlos Barclay, that is VC Partnerships at Google. He runs the partnership, I guess. And founder of Glory by Us entrepreneur. He is an entrepreneur, expert in tech, and also operator with an extensive experience in product. And then we have Luis Pastor, that is founder and CEO of Tritemius Group. He's also the investment director at Tritemius VC, that is Spain's first Web3 focused VC. Now that you know who is here and who we are going to speak, I would like to know a little about the role that you have at Google and any other detail that you.
Yeah, for sure. So first of all, thank you for having me. It's a pleasure to be here. So at Google, I do venture capital partnerships under Google Cloud, which means I work with some of our tier one VC funds, primarily based in New York City, but they invest globally and generally across a lot of different sectors. And I essentially help them, the partners and their founders, get access to the best in class at Google Cloud, from AI to credits to access to our experts to curated events. However, we can help them to grow and excel as a company and as a venture fund. I am the VC firm's go-to guy for everything that I can be for Google Cloud and Google as a whole.
Okay, and Luis, please tell us a little about Tritemius, please.
Sure. Well, we are a group focused on investing in Web3, blockchain, and digital assets, and also creating startups from a venture building point of view. But regarding the VC, we mainly invest in this area, early stage startups, globally, but I'll say that our focus is Europe and Latin America, since we have been in the space for quite a long while, and we can help startups in terms of connecting with clients, regulators, and so on.
Okay, now that we have Robbie's not here, so we have a little more time, maybe we can start talking about the investment thesis, because it's different from Tritemius and also what you do in Google Cloud. So maybe let's start with you, Luis. What is the thesis that you are managing at the VC?
Yeah, our thesis is quite generalistic. The spectrum is quite broad within Web3 and digital assets. But I'll say that since we have a blended team with different experiences in technology, regulation, and finance, we always look at this myriad of technologies as an opportunity to invest in the infrastructure. We believe that the infrastructure is quite fragmented, and we have opportunities to pick the right future infrastructures. Not only, I'm not talking only about layers, interoperability, but also what is happening, leveraging on the infrastructure to create different products. DeFi is also quite relevant for us. And since now we finally have institutional adoption coming into that world, we're going to see like loads of products that are going to be even incorporated within the TradFi. Also, cybersecurity, it's very relevant for us. We believe we are still missing top-notch solutions to cover the gaps in terms of deploying more products in the market. That will be another one. And well, tokenization, it's always there. We think that we are going to see different providers not only to tokenize, but also quite a specific business opportunities. There are a few that we have already invested in, and I would say that those are in a nutshell the main topics of our thesis.
Carlos, what about you?
I mean, so obviously I don't work for the investing side of the business, so I don't have necessarily a thesis. I mean, I can say that the VCs I work with invest across the spectrum of Web3. And I should probably also mention that before Google, I've been there for about a year and a half. I worked at a Web3 startup myself that was connecting traditional finance to Web3, right? And kind of building like those railroad tracks. And I mean, I think that to this point, there's a lot more maturity in the market than there were like 4 or 5 years ago when I was working in it full time. And I think that the market is really driven, in my personal opinion, by retail consumer interest. And so I think that when we kind of see retail users kind of get more into it and talk about it more, there'll be a lot more use cases, a lot more investment from the general funders, not just Web3 investment firms, but general funds kind of going towards empowering, connecting both enterprises as well as consumers, retail consumers to Web3. Um,
It's interesting that you said that you've been seeing a change in terms of maturity, and maybe we can dive a little into it because we were just discussing like we see different trends and different products that were interesting for the market, and maybe we can go into it. Like, how do you see the current state of Web3 innovation globally, the trends that are there, and so on?
Well, I kind of look back at it historically. I mean, for me, I've been in the crypto Web3 space since like 2015. So I kind of like saw like 2 or 3 major hype cycles, right? The first hype cycle was in 2017 when Bitcoin became very popular and it was in rap songs and it was in the news. And that's when like I started, well, I wasn't, yeah, I did start buying it then, but a lot of us did. And so we kind of became educated about it. I feel like that was like layer 1. It's like, what is Bitcoin? What's Ethereum? And people are like gaining interest in it, right? It died down, and so did the industry. The price went down. It happened again in 2020 and 2021. The price went back up. It's back in the news again. And I think in that second cycle, what we saw was like the education around NFTs come in, right? So there was a basic kind of education and awareness about Bitcoin and Ethereum, and like maybe like the major coins. With round 2 came NFTs and maybe altcoins, education around that. We're now in 2025. Entering 2026, and I'm like, hey, like, what's the next thing that the common consumer like me is going to adopt that's going to drive the industry forward? And I think there's a big question around that. I kind of hope that it's, RWAs, right? I think that the common consumer can kind of understand that, like, putting my money into an asset that I can't maybe own as a whole, but I can own a part of, and it's going to grow in value over time. But I know others have opinions about what else it could be, but I'm hoping and I think it could be RWAs.
Okay, and Luis, same question, but let's see like projects or companies or ideas that you've been pitched about, because you said that there's few that you already took in, but many ideas happening around. So how's globally this thing moving?
Yeah, I've been also around for quite a while in the space, like 12 years, and I've seen the waves that Carlos was mentioning. But I think that now the difference, and we have been discussing about this, is regarding institutional adoption and the regulators embracing the technology and finally regulating over this. And that's good for, to Carlos's point, RWA's tokenization. That's a trend for sure. We're going to expect many more assets tokenized, living in blockchains and transacted in blockchains. That's another trend that I believe in. We have invested in a company that, for instance, tokenized guarantees to be a part of the microcredits flows. So it means that at some point, if a lender it's willing to grant a microcredit to an SME, for instance. So they would need a company backing them with these guarantees. And if they are tokenized and governed by smart contracts, you can create this sort of efficiency because of the automation of the claims. And at the same time, behind the guarantees, it could be cash, but it could be gold, or it could be grain, or it could be other things. And in markets like Latin America, or Africa, or even Asia, I believe that this would be a trend to be growing. And regarding the trends, everyone is talking. I was discussing this morning with a few fellow panelists about this. Everyone is talking about stablecoins. We are in a stablecoin summer. Everyone is thinking that stablecoins are going to change a lot of things. Originally, they were created to use as a coverage within DeFi, and they are used on a daily basis in different countries. Enterprises are using that for international trade. And I believe it's a growing trend. I've seen startups that they are paying salaries now with the stable coins, and with those stable coins, you can generate some yield. So that's also quite interesting for the future, I believe.
Just to add a little into this, and probably in the audience you are familiar with this, NASDAQ recently asked the SEC, that is the regulator of securities in the States, that they want to actually tokenize their stuff, like all the products and so on. And this is something that we can see gaining in momentum, maybe the Trump administration starting changing the landscape in terms of regulation and so on. It's giving more credibility to these different theses or this position regarding tokenization and so on, because I remember I started in 2017, maybe not that as early as you, but it was blockchain. The word was blockchain, not Web3. Now you said blockchain and you are a boomer, you know? It's like, it's Web3, man. And you see the maturity of the market, and it's really interesting to see that it's a different iteration of the same, I would say, the goal that is trying to make this more available, more liquid, and yeah, to connect different economies in different places to a global landscape that through tokenization maybe could be done. Yeah, Carlos, please.
This is kind of a question slash a statement. We didn't talk about this before, but I kind of think that Web3 is in need for like a branding upgrade. And by that I mean, like, I know that Web3 is booming, like when my dad talks to me about it. Like if my dad calls me and he's talking about Bitcoin, okay, Bitcoin is up right now. If he calls me, he talks about like this NFT is the one to buy because it reached my dad. And I don't know, like, my dad hasn't talked about stable coins to me, right? He hasn't talked about, I don't think he's gonna ever come to me and say, hey, I have an RWA tokenization thing. Like, but I think that like we have to, there has to be a shift in how we even speak about it to the common consumer. Like myself, I consider myself a common consumer, and I think about it in like terms of like gaming, right? Like Xbox, PlayStation 5. There's probably a very technical term for what those game systems are called, like gaming digital console. No one says that because maybe when it first came out in like the 80s or 70s, like it sounded like so foreign and people just didn't want to have it in their house. Maybe it sounded crazy, but eventually we kind of like branded it to kind of be palatable. Does it make sense? Like, is there like space for branding in Web3 to kind of like evolve to the common consumer?
I think yes, but it's also something regarding necessity, because I'm assuming that your father is in the States.
Yeah.
And I'm from Venezuela, and stable coins are ubiquitous in Venezuela. And it's because Venezuelans are trying to leave the bolivar behind. It's our local currency. And they need, or they want dollars, and these stable coins offer a dollar vehicle that it's important, and it's not only important but also critical for them to actually survive the destruction of the local currency. And then you have Europe trying to build the digital euro, that it's some kind of a stable coin, but still with more intervention of the states or the European Bank. So yes, in a part is branding and also good marketing, because if it reaches our pops, you are doing a good job in terms of marketing. But then it's also necessity. If you don't really need this technology, it will be like a bunch of guys just talking about stuff that nobody cares about. But then, yeah, there's important potential to reach more adoption through good branding, good narratives. And yeah, what is your thought in this specific regarding marketing and so on?
No, I see. I mean, both of the points are valid depending where you are. I mean, thinking from a European mind, we have been trying to regulate it to avoid fraud, and at some point protect consumers and investors into this. but at the same time trying to generate a comfortable framework, regulated framework to, for instance, issuing tokens on debt, on equity, and so on. That's something that I understand that is valuable. But I'll say that besides buzzwords, Web3, I don't know if it's a buzzword or not, I really believe that this is a financial movement that is going to change the financial world forever. It's going to become hybrid, that's for sure. And at the second time, we are going to see different sectors embracing this technology for many other use cases. At the beginning, 15 years ago, so I remember a lot of hype around all of this. Blockchain is going to change everything. It's not going to change anything at all. We'll see. But I really believe that now we are in a position that the technology is going to be used, and you don't really need to know what is behind the scenes. As a consumer, you're going to use it. It's going to be beneficial. It's going to bring you different global interactions. I always give an example for gamers. My nephew is a gamer. He plays League of Legends.
Okay.
And he said, I hate crypto, man. It's everywhere. Everyone is talking about crypto. But I told him that maybe in the future, if you have a technology where you are able to exchange your skins with other players, with other video games like a marketplace, and that is driven by Web3, blockchain, wherever, I said, well, that's nice. That's interesting. So I think that's where we are heading to.
Okay, maybe we can go a little back to allocating and investment and so on. Do you think that there's a cooling phenomenon happening in people actually investing in these kind of projects, or is starting to boom? Because obviously when you have good prices in Bitcoin or Ether or whatever, everybody's talking, it's in the news and so on. But I don't know, I want to have your input regarding if it's booming in terms of capital allocation, or what are your thoughts?
I think booming, like right now, I wouldn't use the word booming. And I should probably also mention that the views I express are mine independently, and not those of Google. I forgot to say that at the beginning. But I think that it's going to. I think we're close again. I was actually watching some startups present here yesterday for the pitch competition, and there was a startup that presented on an advising kind of AI app that kind of advises users on, what to invest in, and kind of assess like your risk profile, and kind of gives you like an investment track to go on, like with your capital to invest in Web3 and in crypto. And I think that's something that's probably gonna that's a great use case, because when things are booming, again, like the average consumer wants to put their money in. And I think that a lot of times the average consumer feels like it's too late for Bitcoin, right? By the time that we reach 200K per Bitcoin, they're gonna feel like, oh, I'm out of the race. So it's like, what are the new opportunities again in Web3 I could invest in? And I think an idea like that is a great use case. They're probably gonna see kind of come about over these next couple of months and years.
And what about you?
Well, we had a crash within the market 2022, and obviously at the same time within VC, it was the whole VC world realized that this exponential growth, burning cash, it was a model difficult to sustain in the long term. And that has created something interesting for us. So at some point, the entrepreneurs that are here in the space are here not because of the hype, are here because they want to build something. They are real builders. They have value to add, and they are more mature. Probably they are second-time or even third-time founders. That's what we are really looking at. So for us, the market being cooled down, it's quite good, because we are gonna enter. And we're gonna back up mature entrepreneurs, fair valuations, and companies that they have a real value proposition.
I just want to piggyback off of what he just said, because he invests in fintech and in crypto and in Web3. I work with a lot of funds that invest on a general basis, right, including Web3. And I know or it's my perspective, they were not blooming right now because they're not really talking about it, right? I think when you see the generalist investors kind of going back to Web3 and back to crypto, that's how I know that it's kind of like back in motion and back in a cycle. But right now, with me seeing like, I have investors that invest in fintech broadly, but is Web3 or crypto a major part of their investment strategy right now and their investment focus? I can't say so. And so like I think to his point, like I've been kind of peeking back again into Web3 these past like few months and few weeks. And I've been seeing the project that I've been working kind of like in like behind the scenes, if you will, kind of in quiet. And like, I'm starting to put my money back in. It's like, okay, like there are folks who believe in this, who are loyalists, who are gonna really, I think, benefit from this like next, kind of hype cycle.
Okay, we have 6 minutes, and I want to touch two different topics: regulation, and then the recipe to ask for money. Maybe we can start with regulation. It's important, obviously, it's key for more adoption and for projects to be successful. So that's my thought. I don't know if you share the same view. What are your thoughts regarding regulation?
For me, as I mentioned before, it's super relevant. That's something that when we are on a due diligence process with the startups, we double check with them. We even have in-house legal experts to validate the business model, but from the regulatory point of view. It's a global technology, but the company is based in a certain place and is gonna probably offer services or the product to clients that it could be in a particular location. And well, we have to observe the regulations that if they are in favor or not. Europe probably is ahead of that on those terms, but we know that there are countries like El Salvador, Singapore, Hong Kong, even Brazil, that they have these positive regulations. Even the US now, finally, I'll say. But yeah, it's super relevant in terms of at least for us, to make investment decision.
Yeah, I mean, I generally agree. I think regulation is overall a net positive, especially in the States. When I was working, in Web3 with the startup, that's what we were kind of waiting on or betting on. It's like, what's regulation going to be, and kind of building kind of towards that future state. And I think that's possibly a reason why I haven't been seeing as much conversation around Web3 these past couple of years, is because it wasn't in place. And I think now that it is, like, investors are going to look for companies, to his point, that are compliant with regulations, that are financially, stable, that, kind of like fit into like a groove that makes sense, and like actual have a great, business like use case. Before, I feel like if you had a cool white paper, you could probably raise money from a VC and get money. Now we're in a much more mature place than we were like 4 or 5 years ago. So you got to be, kind of adhere to those regulations, and it gives everyone kind of just like a base level of understanding of like, okay, what are we all looking for? What are we all doing? And that's a good thing.
Okay, and we can close then, well, asking for the magic recipe. Maybe there are some entrepreneurs here or projects that are looking for money. What would you recommend them to reach people that maybe are in the middle between funds and big allocation, or that are looking to allocate money? What could you recommend them?
I mean, I'll start first. I mean, obviously, I work at Google, so I'll say, like, if you're a founder, you're venture back, please come and leverage Google Cloud. We have like credits that are available to founders across the globe. If you are in an AI company, up to 350K across 2 years in cloud credits, access to our AI experts. We also have a crypto community within Google and Google Cloud that we can, tap founders into. And I will say, just like from my perspective, being someone who's operated at startups for 10 years and now who works with a myriad of like founders and investors, if you're raising capital, be strategic about who you raise from, right? And understand who are the VCs that invest in the things that you care about. If you are a Web3 founder, I would target the Web3 and the fintech investors first, and understand what their investment thesis is, and what size checks they write, and like what rounds they invest in. And just look at their portfolio to make sure that you are using your time as strategically as possible. I think the kind of like, what is it, spray and pray model isn't the best way when you're a founder. You have a limited amount of time. You got to grow a team. You got to make money. You got to raise money. Yeah. build the company. So save time, be strategic, be focused, narrow in on your investors. Like this guy right here.
Basically, we look at a couple of things that are very important to us, the team. I mean, who are the people involved in that, if they have worked together before, if they know what they're going to build, and how they have checked that there is a market. They can, send the proposal over, commercialize it, and so on. And that's something that is not that obvious. So you need to maybe create a pilot, a proof of concept, go out there, try to receive some willingness to pay, which is not that easy sometimes. And for us, that's enough for early stage pre-seed till pre-series A. That's where we invest. But you need to look at that, because like sometimes what we find is entrepreneurs that are super enthusiastic about ideas, which is great, but have you tried to build it? Have you tried to see if there is a market and either consumers or businesses willing to pay for that? And if you get that insight, that information, that's super valuable. But you have to invest, obviously, and you have to sacrifice a lot of things to be an entrepreneur. But I would say that's my recommendation to them.
Okay, and in 50 seconds, 25 for each, what is the next thing? What should we are looking into?
Well, I'll say that very quickly that this technology moving into other sectors, we have been talking for years around digital identity. We have been talking for years about this embracing content producing websites and so on. And I think that's going to come up in the next 2, 3, 4 years, because a lot of people are building on this. Sony, for instance, with its own blockchain. I've heard about different super global music companies working on this. So I think that's going to come like sooner than later.
I mean, I agree. I mean, like I said at the beginning of the talk, I hope that RWA is the next thing. I think it's funny. I was on a tour before this, and the tour guide said she can't afford, I guess, a house here in the city. And again, I think that's probably something that's happening globally. I know it is in the States. Of my generation feel like we can't own the things that our parents did. And so the ability to kind of tokenize like those assets and for us to invest into them, our generation, their generation, is very appealing to me, I think, in my community. And I hope that can be a huge use case going forward.
For me, it's still Bitcoin, guys. Thank you very much for your time.
Thank you so much.